Hi, Warriors. Let the markets come to you. How are you, Sinatra? Hi, Blake. AJ, how you doing?
Morning, coach.
How you doing, buddy? Mike Weissman, how are you? Arnie Day, you're a new name. Welcome to Face. You found the right place. Hi, Kman. James. Brand, how are you? The Consumer Paint, Producer Paint Index. Yeah, tomorrow's the other one. Hi, Ryan. What's that mean?
PPI.
Oh boy. I, I have to get up a half an hour earlier. All right. All right. Yeah, something else. Okay. Fran, Howard, Laura, Steve, Ming Lim, welcome to Face. All right, let's take a look around. My first question to the team is, we came off this. And maybe I'll just start with Blake unless he's busy. But
Oh, I'm here.
we came off that 1780 level pretty good yesterday, Blake. Um, can you give that a probability that that might be the end of the rally rather than a push towards 120?
We're talking about the euro.
Yeah, right there.
Yesterday's the jobs revisions number was, as we were all talking in the chat room,
Yeah,
it seemed like it was such a bad number, but everybody was positioned for it
yeah.
already. And so the drop of the euro back down, to 117, I think is just it like I said, I think it was just a showing of bad positioning, poor positioning.
Yeah.
The French prime minister has been replaced with the old defense minister, I think.
Okay.
So that
Who's
according to
that? What is his name? Pepe Le Pew?
no, his name's not Pepe Le Pew, and I can't even think of his name right off the top of my head. I'm sure somebody's read it a few times this morning. But between those two things, and then on top of it, and I'll let the other guys kind of brief us on everything that's happening in Europe. I mean, you look at what's happening in Poland and Russia's aggression towards Poland. This is like that
Yeah,
to me is Putin kind of spitting in Trump's face and
yeah.
saying, "Hey, you know, what are you going to do now?" I mean, that's all that is. But that I
Well,
think also,
let's give him 50 days so he could roll in to Poland.
y-
Because Trump, the last deadline was 50 days. They expire and then they're longer if there wasn't a ceasefire in 50 days. And I think that's when the 2 week was about to expire. But yeah, I mean, things are definitely accelerating in Europe. And, this is going to be one of the reasons, Blake, in my view, that the dollar's going to gain in preeminence down the road once we do have a confirmed low. And who knows, maybe this week was it. I can't rule it out. When I look at the Dixie and the Euro, but particularly the Dixie, I see two drives. Okay. I mean, it's pretty clear. Now, some people are going to start looking at this as a head and shoulders, right? We could put in a right shoulder. And if it gets weak one more time, it's going to be I'm going to have to buy it down here if I have a nice RSI set up above 30 and we take out these lows. But you know what? Making new lows, um, looking at it today, looks a little not quite as likely as it did yesterday. So I don't know. This action is not bad for the first couple of days of the week when we had the dollar on the ropes Friday, right?
yeah.
So, I mean, I'm conflicted about it. I'm saying it's a possibility that euro maybe doesn't take out the high, maybe rallies back for a right shoulder, while things like cable does make a new high for a three, and Aussie does make a new high to 66.80. So my tell, and this will be a huge tell, if the Dixie makes a new low without the euro making a new high, which would be pretty unusual, that would really be a strong market tell for me because it looks like the other currencies could make new highs. But it's
They
going
all
to be
do.
more
I
of a
mean,
struggle.
yeah,
This,
Aussie's definitely strong. Sterling's getting close to squeezing. I mean, because you get Sterling above 136, it's going to squeeze. I mean, Ryan knows this better than anybody. Everybody's bearish Sterling, myself included. So even though I'm not short cable, I'm still more, leaning into short sterling. I mean, how many people are bearish sterling up here? If we get past 136, what's going to happen, Ryan?
680
Oh, you're going to get these people folding.
Yeah.
But
should get new highs.
yeah, but then, as you said, trading cable with the dollar side of things is completely different to trading something like euro sterling or one of the other pound crosses. It's a completely different ball game. Completely different ball game.
Okay. Yes. So if we're, I just want to get to the goal because that may have been an important day. We had targets close, 3680. I think you had a little higher. That doesn't look, that still looks better than silver, but it still could be a failing rally here. Okay. This says it won't be, but it feels like it correct. And silver put in an even lousier day, and it looks like maybe we make another new high, but they look a little different. And I mean, this
Gold's
is
fallen a really nice channel higher, and I think, I was going to step in front of it yesterday because it
yeah,
had a gravestone doji. If you look at the daily candle, but it still is inside of this channel moving higher. So
yeah,
and so you see yesterday's candle,
yeah,
the nasty gravestone doji, and we still have a lot of time left in today. So
yeah.
um,
Well, top E then. We can never could say topped or bottomed until we look in the rearview mirror for a few weeks. But a top for a pullback is possible.
yeah.
Right? So,
Yeah, I mean, yeah, you gotta let it get if you really want to play on the short side, you got to let it get below 3610, 3600. Then
right,
you might get a little bit of a pullback, and I'd rather just sit on the bid at like 3500 and look for a bounce.
okay.
Unless
Yeah,
you want to short it in small size. It's kind of like equities. I mean, look at equities today. We're at all-time highs again, and that's after yesterday's
yeah.
really shitty jobs revision. Everybody's like, great, we've been trading, non-farm payroll for the last year, like just wrong numbers the whole time. Yet stocks are still at all-time highs. So
Yeah.
yeah. Anyway,
Trying it again. So we'll see. It Nasdaq hasn't made a new high, but it's pretty close now. Um, Yeah, I just keep looking at the momentum of the S&Ps, and I don't know how many times we've made new highs without confirmations. I think you have to go pretty far back, maybe even here. But I don't know. I guess this is what happens.
2021, Dale. Yeah, go.
Yeah,
Right.
yeah,
We've been doing it since 2022, rather.
yeah,
So
since yeah.
yeah. Oh, wait. 2008, 2009. There we go. We've been making new
Well,
highs.
one of the
Relative
days,
strength is divergent. Who gives a
yeah,
shit? It's still going up.
yeah. Well, do you have numbers where you would try it above the market?
I've been wanting to short it right here, like literally at 65.25. I've been telling everybody, hey, this is where I want to get short. But now that we're here, I mean, you guys always have to imagine like if you like for me, if I say I'm gonna do something when it gets to this level, I don't just stick out an order and say I'm getting in no matter what. When you're up here, you have to take into account why we're here and what is ahead. Like for example, I still think we could go higher because if we have benign inflation, I mean the Fed already told us they're looking past this one-off inflation for the tariffs. They've been very clear, and they're going to cut rates because the jobs market is weakening. We all know that. So if we get instead of strong data today and tomorrow, we get weaker data. So let's say PPI, which we normally get after CPI, but let's say since we're getting PPI the first time and it feeds into CPI, let's say PPI comes in weak, like maybe in line or slightly weaker, and CPI comes in line or slightly weaker. We're trading at 6,600, maybe 6,700 in the S&P. And then if the Fed only delivers 25 basis points because the market's going to go, they're going to give us 50, they're going to give us 50, inflation's benign, then I'm going to short the market. So I think it's closer to 6,600 to 6,700 that I'm going to start laying into shorts. I haven't done it yet.
I've heard that number or some fib target around 6650 or something like that.
6,600 would be actually the 161% extension of and an upper trend line of the wedge that we're in. It's the 161% extension of the last 2 weeks move. So
Okay.
basically that's all it is.
Okay.
Simple.
Okay, let's go back to that's Kman. Good morning, Kman.
Good morning, Dale. Morning, everybody.
Is this just a recovery
Morning,
in
Kay.
the end? Is this just a recovery here in the end, Kay? And then we're going to get another shot down for, this could be 1, 2, 3.
Tell
Can
me
we
what
still trade?
it's probably well in dollar yen. I would argue now because we are getting like more and more names to replace Ishiva, but it does look more like a dollar thing than the yen thing, really. Because if you look at and I've been saying that for days or even weeks now, if you look in general at those yen crosses, they are not coming off a lot. So
Okay.
yes, we will trade the dollar if we get weak data and there's more coming in the US tens to the downside. We are going to test the downside again. But then look at the ranges we have been in. You get those spikes below, little spike above that we had a little while back in them, and we're back in the range, in the dollar yen. There's a lot of people now pushing through options to look for a stronger yen as well. The problem with that is that the more people who are buying downside in let's call it dollar yen, the more people who are buying downside, the more we will find them on the bid because they need to recover their premium, right? So and especially that if you buy downside on dollar yen, it's much more expensive than buying topside. So those people will probably start to hedge a bit earlier than topside buyers would have done. Yeah, so for me, it's still in the range. This dollar yen and yeah, Bank of Japan.
USD NOK is one of the only ones making
Yeah,
new lows. It was really, it telegraphed how weak it was all the way down, all the way down.
Yeah, it's
Never hurt you on rallies.
yeah. I
So
think that yeah. I was playing this on the short side and then covered it because we had that little nasty spike there, but I went short again this morning. I think it's for as long as we are below 10, there's a chance we're going to have a look at those prior lows there, 986, and then we have a 50% of the whole 2021-2025 rally coming in dollar NOK around where is it? Around quickly check back on my chart, around 984. So that's another percent from where we are. It's possible to go and have a look, I think.
but don't you think USD CAD was a champion during the recent bout of dollar weakness?
Yeah.
And why was it? I mean, there's the things that bad in Canada.
They're printing weak reports. They're printing weak reports. We had a weak unemployment report. There was a weak GDP report. And they're just it's looking weaker than, for instance, MEX is looking again. So I think the Canadian dollar as such, I wouldn't play to the long side right now. I would not.
Okay, I mean it's got to stop here at some type of retrace, or else you could challenge this.
You always have the dollar, but then again, as I'm doing most of the time, when I try to judge the strength or the weakness of a currency, I start looking at crosses, and the Canadian crosses are weak. They're weak.
Okay,
So
let's see what it's doing up here.
I'm rather thinking this dollar cat could spike if we get stickier numbers or better numbers out of the United States, or stuff that could drag yields up a little bit. I rather think that dollar cat would be one that pushes through to the top side from where I sit, and looking at those crosses. I mean, all the Canadian crosses, Canada is weak.
All right, for TLT, guys drawing this line.
Mm,
It's my bull bear line here. Okay, I mean, it's definitely a breakout. You
yeah.
don't want to see it close back under here.
Mm,
The objective from this is up here around 92, 93. So hard to be short bonds. They're squeezing them.
yeah,
Let's
yeah.
see, right? You have a vibe on the 10-year. This is something that a week ago or so, Greg came in and showed a
Mm,
completion of a pattern down here.
mm.
I
Yeah,
forgot what the pattern was.
4% is always going to be an interesting level. But my longer term view was that anywhere between 390 and 4.5, we're neutral. Um,
Another range.
yeah, somewhere. But I yeah, I mean, it's not going to need a very weak inflation report to drag it back down to 390, I think. Uh,
Okay.
and then you should
Uh,
see a bit of a weaker dollar coming with it.
Maybe we could get Grega to drop in sometime to see if, because sometimes we all do this, right? We'll have an idea today. Today is Wednesday, and something changes in the next couple of days, and it's not the same idea, or we don't have
Mm,
the same conviction, or we might even think the opposite a week later.
mm,
So that's why you have to be a subscriber, because what if we show you a count that Greg is on, but 3 days later, something happens and the count changes and it goes to an alternate. So you're still using that count, and I've done it out of laziness, not because of lack of access, and see that maybe something that was driving my decision has been negated. So maybe he'll stop in, and because this could be an important juncture according to that formation that he showed last week.
Well, I've got his Elliott wave count right here on ForexAnalytix if you want to take a look.
All right, go ahead, show it.
So, and actually Grega was just in the ForexAnalytix chat room just a few minutes ago. He's been in there this morning, kind of responding to some comments that I made a little bit earlier, but this is the 10-year, this is what he's seeing in notes. So he's seeing it
Yeah,
as reaching the C,
close. Yeah,
and we're close, right? So
right.
that means that it's going to start coming back down. Yields are going to start going up again,
Yeah.
is what he's thinking. So,
So
if you're,
that'll be down here at that Y, whatever he down there. That's over 5% on the 10-year
oh, go
down
right
there.
there.
What
Yeah.
is
I
that,
mean,
like 570 going
that,
into next year?
yeah, that would be like 104, actually. So, his view would be if you look at, let me pull up TLT here. Uh, where is it?
Be new
Okay, there it is.
lows. That I think that Jim's looking for new lows after the end of this rally too.
Yeah, so yeah, his view would be somewhere like this, and then down here,
Yeah,
we'd have fresh
yeah.
lows in TLT, something like that. And that's, I mean, that's what he's looking for. Doesn't mean we're gonna, but the count, like you said, the counts can change, and so he updates this every day, and you might see a count here, and then the next day because of whatever's driving the market, it might change. Um,
So if you're
so
following anybody, make sure you could really follow them. And that doesn't mean for just a day or two, especially if you're basing trades off their some of their counts or ideas.
yeah,
Don't follow someone for a day or two and then not have access to what they're thinking while you're risking money. Does that make sense? That's a salesman's line. Does
there you
that make
go.
sense? All right. Anyway,
No, there,
join,
there,
join.
there, there you go, Dale. And speaking of Grega's view, he's looking for the dollar to, break down here through support and retest the
Yeah.
most recent lows as well. And if we get weak inflation data today, that is the one thing that, especially today, because PPI, usually we get PPI after CPI. I know I've been saying it all week, and I've been confusing myself because all week, it's coming off Monday, I was like, and we got CPI, then PPI, but because that's just normally how it is. It's just
I want to address George. George, yes, I've shorted S&Ps every day this week and I've made money because I'm a trader. And when I go in and I have risk initially on a stop, and then I have partial profits, I've taken 7 handles out 3 times on half. And then when the market came back to my entry, I was out. So, you can be on the wrong side of the market in like a daily trend or 4-hour trend and still pull money out on the other side of the market if you use good money management. Just wanted to let you know.
Yeah, there's a thousand ways to skin the cat, right? Like Ryan has a few ways he wants to skin the euro today. So Ryan, why don't you tell us how you're skinning the euro today?
I'm skinning the euro, am I? What am I doing in the euro?
I don't know. I don't know. Oh, wait, hold on. What are you trading? Let's find out. What is
What,
Ryan trading this morning? Let's go
what
in
am
the
I
trade
trading?
room.
I'm short dollar yen. I had to scratch an itch yesterday, and I did so. So I sold it yesterday afternoon. Just before that job stuff dropped, managed to get a bit off in that drop. Added a bit.
And then it came up in our face.
Yeah, then it came up in our face, which I'm not that fussed about because I still think the path is lower.
Okay.
Definite, sell rumor buy fact yesterday in the end over that
Oh,
911 number.
okay.
So yeah, and it could go higher from here if we get a hot PPI number. I expect it to go higher. But as I've been saying all week, I'm looking to hit dollar rallies because the bigger story is the jobs market over inflation. So unless these numbers are stupidly hot, I think the market will trade it for now, and then we'll be back on the labour market thing and what the Fed's going to do next week. So I'm hitting rallies. Long story short.
All right. Well, this one, Dale has been a mother mofo in my face because I was long dollar yen, stopped me out below 147 the other night while I was sleeping, while you and I were sleeping,
Yeah.
and that flush hit the 127% extension of the gap higher, reversed yesterday, even after the BLS numbers reversed. I'm like, what the hell is this thing doing? And then here we are. Kman, how do you make sense of the
It
yen right
looks a
now?
lot like the dollar, same chart, 2 drives.
It's just weird.
Looks a
I
lot
mean,
like the
Kman,
dollar.
Kman, how do you make sense of the yen right now? I mean, what do you do?
That's what I said earlier. I um, if I look at the yen crosses, I don't see too much reason to be long yen as a currency right now.
Yeah, I mean,
Still a
Aussie
bit
yen
of
is
still a
like
bit
right
of
up against there.
uncertainty. If it weren't have been for Ishiba, and that's what I said on the Flow Show as well.
Oh,
If it
that's
weren't have been
crazy.
for Ishiba, now leaving this void and for the others to try and fill it, and we won't know before the 4th of October. I would have even said that the Bank of Japan had all reasons to hike this month, where nobody else expected it, and I would have been looking at being short dollar yen, but. This uncertainty is probably going to push them to stay on hold. So I think the yen is more going to be driven by, obviously, as I said, the dollar side of things, but also risk and the fact that Bank of Japan is probably going to stick where they are, which still makes being yen long for longer a costly affair if you're not doing it against Swiss franc.
Yeah, it is really really choppy, and I'm having a hard time making
And
two
that,
cents of it. So I think just have
yeah,
to wait
and
on
it's
the
still in
dollar
the
move.
range, and it is
Yeah.
still in the range.
Very big, nasty, ugly range right now. And I guess we got to wait for the dollar. Speaking of, if you guys missed Schlegel, he's out, he's speaking right now, and he says negative rates are still possible, not impossible, and he says the bar is high. But as a result, you're seeing the Swiss franc weaken as he's making those comments. So if the dollar does strengthen today following the inflation data, the Swissy might be one that you keep an eye on, just because the Swiss franc is already weak following Schlegel's comments here. So real quick, I just wanted to cover just a few things. The euro, as we've pulled back, and we might be developing what is a wedge. I would be focused on this like lower trend line comes in. So if we make fresh lows in the euro, remember
Yeah.
the Fed, is going to be looking past the inflation data, so they've already said it. So if we have PPI that comes in a little firm, we might actually have the euro come down towards 116, 116.70, 116.65. And I think that you might want to be looking to reverse that if we get down there. If we do have weak inflation data, that's going to send the euro higher. It's going to send stocks higher because the stock market is going to cheer the fact that we get a weak inflation. Dale, you asked me a little bit earlier about the S&P, and like I said, these are the levels I've been waiting to short up here. This is wave 5 completion is somewhere up here, and I've been looking at that long-term 127% extension. You can see it right here.
Yeah. Yeah.
High, low, 127% extension. Been targeting 65, 25 for weeks, like literally a month, and
And it's playing with it a few times.
it is. We're here, but here could be here. Here could
Yeah.
be here. So I'm still, like I said, not standing in front of it. And I think the day to actually be in front of this move is going to be the FOMC, because I still think that inflation is going to, especially if it comes in light today and tomorrow, it's going to send markets higher. Markets are going to start pricing in the possibility of a 50
50.
basis. Yeah. Instead of getting like 3 cuts this year, which the market's pretty much priced in, we're going to get 3 cuts. One at every meeting for the remainder of the year. They might even start pricing in more, or maybe even front loading a little bit with a 50 basis point cut. And when the Fed doesn't deliver that, I think that's when stocks are going to come down. Because if you guys think about and I talked about this on the week ahead video, you think about like what macroeconomists have been saying for like the last couple years. They're like, stocks are going to come down when the Fed cuts rates. Well, the Fed, we had already assumed this year earlier this year that the Fed was going to cut rates and potentially preemptively. And they haven't yet. But now the data is actually starting to turn. We're starting to see weaker jobs data. We're seeing inflation, it's going to be a one-off. The Fed's looking through it anyway. So right now, if the Fed does cut, they are cutting because the US economy is weakening. Usually that's a sign. And if you go back in history, and I don't have it in front of me, but whenever the Fed cuts rates, that usually marks around the top of the market, because they're usually cutting rates for a reason. And in this case, they are going to be cutting rates because our job picture is decisively turning, weaker. And that is something that we should be paying attention to. All right, guys, I'm gonna get ready for the data. So with that being said, Ryan, what any trade setups you're thinking of right now following this data?
Only what I was saying before, just about potentially hitting a dollar rally, and if the dollar gets hit anyway on softer numbers, then I'm happy bunny either way.
All right, sorry guys, we're 45 seconds. Kman, I know you were just talking about things you were wanting to do. Anything in specific here?
Yeah, I'm in very small short positions in the dollar, Aussie, Kiwi, dollar Norway. Still got a little bit of gold left, because that's all the reasons why this thing is going up are still very, very valid.
Yeah.
And now you're adding drones above Poland is another reason not to sell it. Otherwise, I would have thought, because of positioning maybe getting a little bit heavy, that we may be in for a bit of corrective activity, but There's no nothing is changing there. Here we go.
5 seconds. Here we go. All right. PPI, you'll see the data flash right here. Dollar index is to the left.
Soft, soft,
Soft
soft.
data. Wow. 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 And you can see instant response. The US dollar is weakening. We've got the euro breaking higher, dollar yen breaking lower. And you can see the S&P, as expected, is going into new all-time highs as we have soft inflation data. Now, remember that soft inflation data is probably going to weigh in on CPI going into tomorrow. So with that being said, hey, there you go, Dale. You guys were prepared for today, and it is following through. So let's see if we can see 6,600 after the CPI tomorrow, and start looking for some setups going into non-farm payroll next week. And with that being said, Dale, I think you have Mark Chandler. Is he here?
Yeah, you have to promote him.
Oh,
If you're-
sorry, that was my fault. I thought I made you co-host,
He's
which I'm
here.
going to do right now. Let me go grab Mark.
I could report him at 11
You
June.
can
Mark, you're on report.
You're on report. Here he is. All right. Hey, let's bring literally one of my favorite people. I love Mark Chandler. He's a good friend of mine and a good friend of ours here at Forex Analytics. And like I said, one of my favorite people to get analysis from. I love reading his column every day. So I'm going to turn it over to Mark, or turn it over to Dale so we can interview Mark. Mark, welcome to F.A.C.E, and glad to have you here, my friend.
Mark, I'm unmuting him now. There you
There
go,
it is.
Mark.
Morning. Thanks a lot. Thanks, Blake.
Hey, good morning. And you're welcome.
Hey, Mark, great to have you on a day like this. We should see the dollar weakening dramatically. Uh, are we going to 120 euro, Mark? Is that a
I think so,
target
but
of yours?
it's not going to happen today, of course. I think that look, at the end of the day, the CPI is more important than the PPI. And we got to remember that even though it's called producer prices, there are some things, of course, that impact the PCE deflator, which, despite all the media talking about it as the CPI or the core PCE deflator being the Fed's so-called preferred measure, the Fed targets headline PCE deflator. And the CPI and the PPI feed into that. And so, yeah, I think we saw the headline reaction to the softer than expected PPI and, of course, a downward revision. But we still are looking at an uptick in the CPI tomorrow. I think it'll be the fourth month in a row that we get the headline increase in the CPI. And so, I hear what you guys are saying about what the Fed can do, but the market is pricing in, say, a 1 in 8 chance or so of a 50 basis point cut next week. I think that's a bit exaggerated. And so I was looking for, between today and tomorrow's CPI, for U.S. interest rates to back up a little bit. Is a 10-year really going to go through 4%? I don't think
That's a
so.
question. That's a question that we were asking. 4%, and there are some Elliott targets there that our Elliottician has down there at 4 to complete this whole thing, and that rates could start heading up from these levels. Is that what you're talking about?
I don't know about how much rates are going to go up. I mean, it seems to me clear that the labor market is a key for consumption. It's really a driver for the economy. And so I'm not sure that rates will be backing up that much, but I do think that the pendulum of market sentiment, I think, has swung maybe too hard towards this 50 basis point rate cut and these low rates right now. I think we need to see some more data, real sector data, to really get a convincing break of 4%. And the reason I say 4% is because I think, what are we really playing for? And think about the risk reward. If we're at 408 now, more or less, are we playing for 8 basis points to the downside? Is that what there's left? Versus, say,
Yeah.
10 to 15 to the upside. So to me, the risk reward doesn't really pay to be playing for lower yields at these
Okay.
levels. And you can also see the dollar. I mean, even though the dollar pulled back on the PPI headline, we're not really seeing a trending day yet, right? We're really just consolidating. And I'd be looking at, that we take it, maybe even an inside day today. I think people are a bit confused. I think positions are already playing for not only the CPI and the and next week's Fed meeting, but I think look at what happened. I mean, I think someone mentioned it earlier about the Poland shooting down Russian drones. There's talk that Poland might try to invoke the article of NATO for mutual defense. I don't think that comes to pass, but I think in that uncertain environment, geopolitical tensions, let alone what happened with Israel yesterday and Qatar, I'm not so sure that we're going to get a big move lower in the dollar.
Okay. Yeah, because a lot of people, are in the camp, Mark, that the low we had a month or so ago down here, a couple months ago, they're looking for it to be tested or taken out. And, this action, the way you're thinking, this might be accumulation for a second higher low. Is this
Something
off
like
the
that.
table for you? A
Yeah,
new
I could.
low?
I mean, look, I'm still a big dollar bear, but except in the short run. I think that, like I say, I think the pendulum of market sentiment has just swung a little bit too far. And
Well, you have a lot. Everyone's a big long-term dollar bear. Can you name a long-term dollar bull? Anyone?
and I don't really follow all the calls from
Anybody?
different banks and everything, but I
Yeah.
agree. I mean, most people seem to be bearish the dollar. It seems like market positions accordingly. But like I say, I think that more reasonable when you think about what's going on in the world. I think that we could see a still a little bit move higher in the dollar, maybe squeeze out some of momentum traders, some trend followers. We squeeze the dollar higher before it comes back off.
Okay. So if you're thinking about that, you'd probably be buying do you have a favorite fiat? The action I've been looking at is that the Aussie has been showing more relative strength. The commodity currencies have been acting better than, for example, cable and
Yeah,
even the euro lately. So
Yeah,
it's
here's how I sort of think about it. I really think that the capital markets are more important than the markets for goods and services. I mean, think about it. The foreign exchange market, average daily turnover is something like $7.5 trillion. In 1 week, we do more in the foreign exchange market than global trade in a year. And so
yeah.
I really focus, and I know there's a tendency, I think, for a lot of high frequency foreign exchange traders to go for whatever the shiny object of the day is. And I find that for what I do, of course, like Blake said, there's many ways to make money. But in what I do, I try to focus on the signal. And I think the signal for the dollar comes from US interest rates. I know macroeconomic theory is going to tell us that it's about the interest rate differentials. But
Yeah.
most of the time, like on dollar yen, the correlation between dollar yen movement and the changes in the 10-year yield are not only higher, more robust correlation than there is with the spread or Japanese interest rates for that matter. And when it comes to the euro, which of course drives the dollar index often, I look at the 2-year interest rate differential between the US and Germany. And we're
Mm.
at basically the lows for the year. And so that's why I'm overall negative the dollar. I think that, while the Fed's been sitting pat this year, other countries have been cutting interest rates. Most countries outside, thinking of the G10 countries, are almost done cutting interest rates. There might be another one from the ECB, one or two from the Bank of Canada. Some people are even talking that the RBA is done. So when I think about the dollar block or what you call those commodity currencies, I don't really see it like commodity currencies because that gets me focused again on trade and I want to focus on the capital markets. And what I find happens is when the dollar is weak, the Canadian dollar tends to be a laggard. In July, when the dollar bounced, the Canadian dollar was the strongest of the G10 currencies. And so what
Okay.
I typically then try to really focus on playing these underlying relationships. And of course, the on the Weather Channel it was saying that there's an 80% chance it rains. So I bring my umbrella. If it doesn't rain, the weather person really wasn't wrong. 80% correlation is not 100% correlation. So
Right.
you've got to
Exactly.
allow some deviation.
Okay. All right.
And I
So
see the euro as we're speaking, Dale, the euro is back flat on the day. It's
yeah.
given up. basically everything it gained on the PPI.
Yeah. I mean, the way the dollar closed Friday and what it's doing now, I think is, you know, the people are going to start getting long. Maybe one more low, but I'm kind of with you that I think there are just too many dollar bears right here. And I don't know if this was enough to shake them out. In fact, this encouraged dollar bears because it technically was only three waves, right, Mark? So, all the eliticians go, well, that's a bear market rally. We should see new lows, but it's sure taking its time. It's sure, everything seems to be ranging right now. Kman talks about we have ranges in the dollar. Really, the euro's been a range for quite some time. What's going to take us out of the range, or should we just get used to trading the range?
Of course, instead of rangers are like friends. It's your friend until it stabs you in the back. And so, and the ranges I think are only interesting at the extremes. And so for me, like the extreme now on the euro is about 116.50. There's a lot of options that expire there as well. And so I
Okay.
think if we could take out 116.50 on the euro, I think that'll squeeze out some of the late longs.
Okay. All right. Interesting. You bring up uh, what's happening with Poland, and it does seem like things are continue to accelerate over there. Could the interest rate differentials and a lot of the fundamentals you look at be thrown over the side of the boat if the war in Europe expands because the ocean between us and Europe is going to make the dollar attractive again?
Yeah, I mean,
Would
I,
that
I do.
trumpet would that trumpet all the economic fundamentals?
If the war really spreads, yes, I suspect that neither the U.S. nor Europe, nor Russia for that matter, really wants the war to expand. I mean, you look what's happened since the summit between Trump and Putin. Uh, there was no retaliation from the U.S. as Trump had threatened, and Russia seems to have gotten more vicious and deeper
Right,
attacks on Ukraine.
right.
And so, what I think is really going on here, it's kind of interesting. I think that the things that Panama, Greenland, and I talk about Canada as a state of the U.S., what they have in common, I think, is the U.S. recognizes, even if it's not articulate about this, recognizes that it's no longer the top dog economy. That is the most efficient economy, like we were for the past century or so. The US is adopting what I think is spheres of influence. This is a classic, like 19th, 18th century type of world organization. The new national security strategy that was already been like leaked a little bit to the press has the US changing its focus towards what it calls the homeland. That's about the National Guard in Washington and the Western Hemisphere. And if the US is going to grab its sphere of influence, like the old Monroe Doctrine, it means that
Yeah,
we're going to be less likely to spend lives or money stopping another great power like Russia or China from grabbing their sphere of influence. And I think capitals around the world are nervous about this. Look what happened to South Korea. They agreed to build a plant, fabrication plant in the U.S., and we raid them for
yeah.
what seems to be common uh, sort of violations. So it is breaking the law, perhaps. It's yet to be proven, but there might be some violations. But we come down to chaining these people up, and I think this is, if I was in Taipei, the capital of Taiwan, I'd be scared about the way the U.S. is treating Ukraine and its other allies. Some people say that, this idea in the press that Trump wants to get the Nobel Peace Prize. Well, look at what he's been able to do. He's been able to get India and China, which have fought each other at the borders within the last several years. He's gotten them to be having to be holding hands again. That's what the Nobel Peace Prize should be for.
Interesting. Okay, so uh, basically isolationism and
Yeah,
throwing our weight around in this hemisphere.
yeah, no,
Is
I don't
that
think it's
is that it?
isolationism. I think that isolationism is a misnomer. I mean, look
Okay.
at what we just did to Venezuela.
Yeah, that wasn't,
I
yeah,
mean, I think what it is unilateralism. And this is what happened after World War I, when the wing of the Republicans, which Trump now represents, blocked the joining of the League of Nations. It wasn't because we wanted to be isolationists, despite what some historians call that period, but it was we wanted to be unilateralists. We didn't want to be stopped by a group of other countries. If you're the top dog country, you got the strongest military in the world, why would you want to leave it to what other countries say?
okay, got it. So that's it. We're the big kid on the block in our neighborhood. Not the world is not our neighborhood anymore.
I think so. I think that that's what I think by the spheres of influence. And I think it's a belated recognition that the U.S. is that we're not where we were either when the Berlin Wall fell or where we were in the early 1900s.
Okay. You know, there is talk that Europe is doing everything to avoid a peace deal and that they actually are moving towards war. They're building bomb shelters in their countries.
No,
Um,
I get it. I get it. But look how nervous the
what,
U.S. is when China or Russia send a ship into the Caribbean. I think that Europe, I mean, think about what happened earlier this year. I think this was really the kiss of death for the euro bearers. Was when the World Economic Forum, the talk coming out of that was Europe was uninvestable. Of course, Europe does. I mean, Europe is afraid that they've given, in effect, Russia Crimea without fighting about it, and now Russia says that's not good enough. We want more of Ukraine. And so, where does that stop? And I think this is the appeasement argument that here in the US we sort of lose track of because the war seems so far away.
uh, you following metals at all, Mark? Is this a bull market that just goes on forever in the gold?
Yeah, for the first time, I shouldn't say for the first time, but for the longest period, I've been long gold now. It's been about 6 months. I've been able to ride this, but it's not because I attribute any special meaning to gold as a long-term asset or as some kind of store of value. I look in real terms, it's still below, it still hasn't done great over my lifetime of our careers in the markets. But I do think that a lot of forces are moving to favor gold. Lower interest rates, the freezing of Russian assets, Russian central bank assets. I think the disruption of emanating from the U.S. now. Uh, I think that scares a lot of people. And so, in many ways, with this euro dollar market, many countries and companies borrow dollars. There's a natural short dollar position out there. So when things go bad, they have to cover their shorts.
Yeah.
It would lift the dollar in this, what looks like a flight to safety. But I think that the discretionary part, because if you're going to trade oil, soybeans, semiconductor chips, you most likely have to trade in US dollars. But for the discretionary part, I think countries are trying to avoid the dollar. They just don't understand or know the direction of US policy. And I don't mean Fed policy. I think Fed policy is clear that over the next, whether, we can debate about how much they do in the very short term, but over the next year, we should be expecting about 100 basis points or more of Fed cuts. That's going to be more than the other G10 countries. And so, but I think that people want to diversify a bit away from the dollar. But I was talking with someone else earlier this week, and they asked the AI, what level of gold do we need for the U.S. not to be in debt anymore? Over
Okay.
$100,000 an ounce. A ridiculous level. We're not going to see that, right?
Yeah.
But I do think that there's more upside in gold. Partly it's sort of what Keynes taught us, right? Is that the markets are like a beauty contest. It's not to pick who you think is the most beautiful, but to pick who everybody else is going to think is the most beautiful. And right now, I think everybody else thinks gold is the most beautiful. So let's go for the ride.
Okay. All right. So, anything on energy and what's happening in the Middle East with Israel? I mean, kind of a very, surprising attack in another sovereign nation um, that happened in Qatar yesterday. You think that's
Yeah,
going to,
I
what's
don't really think
happening?
that. I don't really think that stuff matters so much. I
Yeah.
think that to me the most important thing that's happened in the crude market is that OPEC and their allies have changed course, and now they are trying to compete for market share, which partly means driving the price down. And we're already seeing some signs of U.S. investment in the oil patch slowing. We're already
Yeah.
seeing some people suspect peak shale is behind us. And so, to me, that's the key is that the changing tactics of Saudi Arabia and OPEC to go for market share, which means more production, lower prices.
Okay. So we've covered really a lot of the board. What are you doing lately, Mark, for your customers? What are you telling them as far as dollar exposure? Do you have is the euro your favorite long fiat currency against the dollar or any other currency?
It's a funny thing you ask this because I think that, many people think and these kind of questions sort of encourage this idea that the foreign exchange market is a bunch of people like us, short-term speculators. The market is not just that. And most of my clients are corporations. They
Right,
don't want what you think is the best trade is. They want to be
right.
helped in managing the exposure, managing the risk. I mean, you think of what happens, the volatility. We talk about floating exchange rates, and we made this necessity a virtue. But floating exchange rates mean volatile exchange rates. You think about what the average profit margin is for a small or medium-sized business. The currency market can eat it away. And so corporations are typically hedging in the foreign exchange market. And so our clients typically have relatively, on both sides of the market, Canada, Mexico, and the euro. More interest in China these days. And one of the things that's happened, and when the dollar was in this big bull market, U.S. Importers uh, were, were paying their suppliers in US dollars. And those exporters, those foreign exporters, were happy to accept the dollar as an appreciating currency. That's changed. As you know, the dollar really fell apart in the first
Yes,
half this year. And so a
right.
lot of foreign producers want to get paid in something other than dollars. And so our small, medium-sized businesses, corporate America, is having to sort of reassess which currency they're going to be paying in, and that requires a hedging program, which is really also why I think that most corporates are not going to have Bitcoin or crypto in the reserves. You think about the job is of a corporate treasurer, manage risk. If you're going to take on in the treasuries department crypto, now you're taking on another risk. We can consider currency risk just for the sake of the argument. I still doubt whether it's really currencies we're talking about here, but they won't take on crypto because it takes on a new risk, and their job is to minimize risk. Neither their liabilities, what they have to pay, nor their receivables, what they're going to be getting, is going to be in crypto. And so, why would they want to have crypto on their books?
Okay. Do you understand this whole stablecoin thing that's going down?
Understand it. I don't know. I'm a bit bewildered by the use case for it. I see if people want to take money out of the U.S., like say Mexican workers who work in the U.S. and send money back home, worker remittances is a big part of the capital inflows into Mexico. But for Americans, I mean, in many ways, I think that you think about this foreign exchange market. I said $7.5 trillion a day. It's all done digitally. It's not like someone it's not like Deutsche Bank owes Citibank 100 million euros and they're going to be bringing over a suitcase of euros. These are accounting functions. They shift on your ledger. So I think that in many ways, we're already in a digital world. And I'm not sure. I mean, I see though that the stable coin, some of the large players there have a lot of treasuries, and they're as large as maybe even larger than some hedge funds. This is a new source of demand for treasuries. But I worry about the other side of it. As money flows into stable coins or that kind of thing that drains money from the banking system. And this is an important point. On Monday, the 15th is the tax date. We're already seeing some pressures in the money markets rise. Look at SOFR, which is, I think, almost its highest level since early July. We've got
How about the repo markets had a couple of incidences of kind of running dry on cash, and people have had to go the window?
yeah, well, I think we'll see that when we get the Thursday Fed statement. But in general, I think that the pressure, whether it's because of the tax date, we're seeing the use of the reverse repo, which is where money has been like stocked away, extra reserves. I think that we're reaching a point where it wouldn't surprise me next week. Not only does the Fed cut rates 25 basis points, update its the dot plot, the summary of economic projections, but also has to say something, I think, about QT. Remember, this is what's happening. The Fed is letting bonds roll off, mature without fully
Right.
replacing them. That is also a drain on reserves. And so I worry that in the next, starting as soon as Monday, we could see, if not a repeat of 2019, September 2019, we could see pressure grow in the money markets, which would drive up interest rates, and in turn, I think supports this near
The
term
dollar.
bullish outlook for the dollar.
Okay. Definitely a voice, Mark, that we needed to hear today with everyone talking about the death of the dollar right here, and that, it was a layup for new lows. And I think that's the way the market's positioned. So, if it turns into something, there's sure a lot of dollar bears to be squeezed, aren't there?
Yeah, so I think that, I might have said this before, but I think that in my experience, people who make money in the markets aren't right more often. And I think that's partly your point earlier, dear, when you talked about how you can take money out of I forgot whether it was the euro or the S&Ps. You said that you were
Yeah,
against the daily trend, but you took money out intraday, which speaks to
right.
your trading prowess. But I think that the way people make money in the market is not being right more often, but risk management. I've seen
Yeah,
professional traders, amateur traders, myself included, make a little money, lose a lot of money, make a little money, make a little money, lose a lot of money, and we've got to be better risk managers if we're really going to
yeah,
make money. And it's not necessarily, I mean, of course, we're going to be wrong a lot. I tell
yeah,
my wife I'm going to be wrong half the time today. It's still going to be a good day. And that's
yeah.
because admitting you're wrong, you have conviction, but admit you're wrong and don't get like married or put your ego into the trade.
Okay. And you really do have to admit you're wrong when you're having a discussion with your wife, right?
She's always right.
Yes.
Always are.
Someone told me, Dale, the best thing to do in a situation like that is look down at your shoes. Have you ever tried that?
No.
All right, give it give it a shot, buddy. Mark, it's a delight talking to you, and really, I think you opened people's ears and eyes to looking at the other side of the market, because people are pretty bared up in the dollar, and you have to pick your spots. And I'm so glad you come in every quarter and do a spot with us. I'm glad that we picked each other to, over the years be able to have these conversations. I'm grateful, and lots of respect
Still,
from our,
and you really find good days to have me on when, if, 'cause like you say, we got to pick our spots for these turning points.
yeah,
To know when the market sentiment is, even if we agree with it, might get too extreme.
maybe it's Providence. I don't think it's luck. Anyway, thank you, Mark. Listen, everyone, this is where you could get Mark's stuff. All right. Go to, not just following him on X, but he has lots of articles, and you're not providing anything for retail like any kind of market letter or anything, are you?
No, I post everything on my blog. I've been fortunate. I know a lot of people try to monetize their postings on the internet. I'm fortunate that my bosses let me post it over the years. What I do for my team, I share broadly.
Okay. What good is anything until it's shared with another? So,
Keep secrets.
Mark, have a great rest of the summer and a very good fall season, and we'll be talking when it's dark outside early in the fall sometime. And
Good luck to everybody. We need luck besides hard work.
all right, Mazel Tov. Good luck, everybody. And Mark, it's lucky when you come here and talk to us. So thanks. We appreciate what you provide to the community all these years, and that you come in and talk to us personally. Thank you, buddy.
Thank you. Good luck.
Good luck, Mark. And that's a wrap, everyone. Hope you enjoyed it. I always love talking to Mark. Gives you some pretty good perspectives here. Good luck the rest of the day, everybody. We'll see you tomorrow for the CPI. Oh, thanks, Gelsey. And Saloom, congratulations on the melt up continuing. And everyone have a good day. And smell the roses too. Don't forget, don't just count your pips, count your blessings. Adios.